Hello guys, this is the CLT Trader. Welcome to my channel. So today, the topic of today will be about internal range liquidity. The topic of today will be about internal range liquidity. So today we'll be talking about internal range liquidity and how to identify them. Identify them. We have external range liquidity and we also have internal range liquidity, but today we'll be focusing on internal range liquidity. Today we'll be focusing on internal range liquidity, right? So that will be our topic of today. And you have to understand that in internal range liquidity, we have order block, which is an internal range liquidity, and we have a breaker block, we have a mitigation block, we have a fair value gap, and we have also a trend line liquidity. Those are all internal range liquidity. Like for example, this is our chart, right? This is our chart on USD CHF, as you can see on the 4-hour time frame. This is our chart on USD CHF. So if we want to talk about internal range liquidity, let's start with fair value gap. Fair value gap is one of the internal range liquidity that we have. Okay, on this chart, we are currently in an uptrend. So if we want to identify internal range liquidity, we want to start on fair value gap. Fair value gap is one of the internal range liquidity. So let's first of all focus on fair value gaps. If you want to identify internal range liquidity in the form of a fair value gap in the market, this is an internal range liquidity. Like for example, this is one of the internal range liquidity, this fair value gap. As you can see, this fair value gap is an internal range liquidity. You can clearly see how price is respecting the fair value gap. You can clearly see how price is respecting the fair value gap. So that's one of the internal range liquidity that we have in the market. That's one of the key levels that you can use it to look for your buy or sell opportunity once price have tapped into them. And once you see this internal range liquidity in the form of a fair value gap, that is a sign of imbalance. It means within this zone, buyers was very strong in the market. Buyers were very strong in the market. So that's why price left behind this imbalance, this fair value gap, right? That's a high momentum of buyers in the market. That's how to identify them, right? So that is one of the internal range liquidity that we have in the form of a fair value gap. And we also have another one here. We have another fair value gap here. Price fails to tap into this one, and above it we have another fair value gap again, and price respects it. This is another fair value gap. As you can see, these are the areas where you can look for your good opportunities to go long, right, in an uptrend. So within this upward move, these are the fair value gap that we have. We have this 1, 2, and 3. These are the fair value gap that we have. So once price tap into the fair value gap, you clearly see how there was a rejection to the upside. So that means that those are key levels. Those are point of interest that you can use it to grab your opportunity in the market, being it buy opportunity or sell opportunity. It just matter on the trend of the market, if the bias is bearish or bullish. So those are the internal range liquidity that we have in the form of fair value gap, as you can see. So let's take more examples on how to mark fair value gap. Let's take more example. Here we also have another fair value gap in this bearish move. On this bearish move, you can see we have a fair value gap, and price have already respected that fair value gap. Once price tap into the fair value gap, you can see a rejection to the downside. So that is one of the fair value gap. And above this area, we also have another fair value gap. Price didn't tap into this zone, but once price was coming back, you can see if you drag it to the other side, you see how price respected the fair value gap in this area. In this area, you can clearly see how price respected the fair value gap. Price respected the fair value gap. So fair value gap is very powerful, especially when you are trading forex pairs. Most of the times you really respect fair value gap even more than other block. So those are the fair value gap that we have. Those are the fair value gap that we have. We also have this one. This is the other fair value gap. So guys, this video will not be long. This video will not be long. Today we'll be focusing on fair value gaps only. I want you guys to know how to identify fair value gaps. That's why I'm taking many examples. So today we'll be talking about fair value gaps, and the next topic will be on order block. The other one will be on mitigation block. The other one will be on breaker block and trendline liquidity. We'll take it one step to another, right? One after another. Because if you decide to discuss about all those points here, so many people will be confused. So it's good we take it one step after another. So that's how to identify fair value gaps in the market, right? That's how to identify fair value gaps. We have so many fair value gaps. You just need to know how to identify them and use them as your point of interest. We also have this fair value gap. You can see we have a pullback and price tap into the fair value gap and a continuation to the upside. We have a push from here. We have a retest from the fair value gap, and we have a push to the upside. So that's how to identify fair value gap. Once you see a fair value gap in the market and price come back to retest on that fair value gap, pay close attention to see how price will react from that fair value gap. Once you see a reversal pattern from there, you can take your trade from there. This is another fair value gap. You can see most of them are not failing. Price mostly respect them, as you can see. That's another fair value gap. This is another fair value gap here. This is another fair value gap that price is respecting. This is another fair value gap that price is respecting. And this is another fair value gap again. This is another one. As you can see, price respect that one as well. And this is another one again. This is another fair value gap. As you can see, price have already tapped into the fair value gap and it is pushing to the upside. And now we are in the 4-hour time frame, right? We are in the 4-hour time frame. Once price tap into your 4-hour fair value gap, right, you need to scale down on the 15-minute time frame to look for your entry opportunity, right? Let's focus on this last one. Let's scale down on the 15-minute time frame and see how we can get a reversal from there and catch our entry, right? So this is the last one. We have price tap into this fair value gap. And this zone was supposed to be an order block. This zone was supposed to be a supply zone to continue the downward move, but somehow price break above that zone. So this zone now will act now as a demand zone, and we have this market structure shift from here. This is the 15-minute time frame. Price was pushing to the upside, to the downside, leaving behind this strong high, right? Price was pushing to the upside, and we have this break of structure to the downside. So this guy now, this was our strong high, but price tap into the fair value gap and it pushed to the upside and break above the high, right? Price break above the high, leaving behind another fair value gap in the 15-minute time frame, leaving behind another fair value gap. As you can see, these are the points that we can use to look for our buy opportunity. Once you see something like this, you just need to put your pending order here and put your stop loss below. You put your stop loss somewhere around here, right? And target the next high, and target the next high, right? And target the next high. As you can see, that's a clean move. That's a clean move. So once price tap into your fair value gap in the higher time frame, maybe the 4-hour time frame, you scale down to your 15-minute time frame and look for your reversal. This is a reversal from here. Once you see a valid reversal, you mark an internal range liquidity. Within that range, we had our fair value gap here in the 15-minute. Price gave us a market structure shift, leaving behind a fair value gap. So this fair value gap will be the point of interest that we'll be using to buy to the upside. So that's how to identify fair value gap, and that's how to look for entry opportunity using the same fair value gap. So that's an example on how to execute using fair value gap. Once you are able to mark them on the higher time frame, once you are able to mark your fair value gap on the higher time frame, you're supposed to know how to execute on the lower time frame. Once you mark on the higher time frame your fair value gap, you need to scale down on the lower time frame on the 15-minute and know how to trade the reversal, right? Once you scale down on the 15-minute, you know what you want to see. You need to see that stuff before you can enter. You need to see something like a reversal. Once you see that reversal, you can just place your order within an internal range liquidity, being it order block or fair value gap within that range. From there, you can take your buy opportunity from there. So that's how to identify fair value gap and how to execute using those fair value gaps. So those are the fair value gaps that we have in the market. Even this one, we have this fair value gap as well. This is also a fair value gap. These are points of interest in the market. This is also another fair value gap. As you can see, we have this fair value gap. Price pull back and tap into the fair value gap. As you can see, we are pushing to the downside. We have this downward move, and we have this pull back, tap into the fair value gap, and we have a continuation to a downtrend. So that's how to use the fair value gaps. That's how to use fair value gap. Once you identify it, you wait for pullback and price tap into the fair value gap. You scale down on the lower time frame. You look for a reversal and you take your trade. So I think that is all for today, guys. That is all for today. So we just need to focus on this fair value gap, know how to identify them, and know how to take our good entry opportunity using the fair value gap. So today we will just focus on this fair value gap and we'll try to backtest it and know how to take our opportunity using fair value gap. So on the next video, I'll be talking about, we'll be having our topic of discussion on either order block or breaker block, or mitigation block, or trendline liquidity. So you can just comment. You can just drop a comment on the comment section. You can just drop a comment on the comment section on which topic of discussion you want us to have in the next class. After watching this video, you can just drop a comment there on the next topic of discussion on what you want us to discuss in the next class, so I can be doing my next video based on that. So you can do well to comment, share, and like. So this will be the end of this video. I will be seeing you guys in the next video. This is the CRT Trader. Peace out.